has gotten to the point of close to breakout. It's breaking out at this point. Over 275 is a breakout. Obviously, over silver is a breakout, and those aren't new highs until we get to $50. But there's really nothing on the chart between $30 and $50. So once we get over 30, I think 30 is going to become the floor. And you probably, I'm guessing within 3 to 6 months time, you'll see $50 in silver. You're locking in a profit as soon as you buy the metal. You buy the metal, you sell the metal at the same time, then you deliver it and you book the profit.
In today's market recap, hot commodity silver outpaces gold as buying gains momentum. Gold's record-setting rally may have captured the headlines this year, but it's silver that's running harder and faster as the less glamorous metal benefits from robust financial and industrial demand. Silver has soared by more than a quarter this year, outpacing gold and making it one of the year's best performing major commodities. Yet, in relative terms, silver is still cheap. It currently takes about 80 ounces of silver to buy 1 ounce of gold, compared with the 20-year average of 68. The two metals move largely in tandem as both offer similar macro and currency hedging properties, with gold hitting a record on central bank buying, retail interest in China, and a resurgence in bets lower U.S. interest rates are on the way. Silver's gone along for the ride. Now we'll show you the best clips of the latest interview where a financial expert discusses this macroeconomic events in detail and explains you how to be positioned for maximize your stack. Smash the subscribe button, hit the like button, and share this video with someone who loves stacking silver. Enjoy the episode.
And they really went into gear the end of February, early March. That in gold, the big buyer has been China. You're also seeing pretty good buying out of Europe. In silver, the huge buying is coming out of India. And both metals got pretty overbought in early mid-April. We had a pretty good, decent-sized pullback. The prices relaxed, and the gold nor silver were overbought. And then just in the last a week and a half or so, you started to see some strength. And I picked up on the article that I posted. I posted 3 charts: gold, silver, and the miners. I used the HUI index. And what you'll see is that the HUI has gotten to the point of close to breakout. It's breaking out at this point. Over 275 is a breakout. Obviously, over silver is a breakout. And those aren't new highs until we get to $50. But there's really nothing on the chart between $30 and $50. So once we get over 30, I think 30 is going to become the floor. And you probably, I'm guessing within 3 to 6 months time, you'll see $50 in silver. And of course, gold is again pushing up against 2,400. Over 2425 is a new high. If you look at the charts that I posted, you can see on the very bottom of the chart, you see the MACD, that's the moving average convergence divergence. And if you look at the very current time, you'll see on all 3 charts, you'll see a hook that's forming, and the HUI and silver have crossed over, and gold is lagging just a little. The hook is not fully completed, but we've got a crossover in silver and the HUI, and that's going to create momentum buying in silver, gold, and the HUI, and that'll push these things into new highs. And I don't. Yes, we're going to see huge volatility, but the paper markets no longer rule the price as they have in the past. Yeah, I mean, an ounce of gold or an ounce of silver that was mined 100 years ago, 200 years ago, 1,000 years ago is still only an ounce of gold. Nothing changed. It doesn't go up. It doesn't go down. It just is. What changes is the value of the currencies. And watching gold, silver, and even the cost of a cup of coffee going higher is a function of the fiat currencies losing purchasing power.
In the continuation of the episode, our guest highlights the recent price breakout in gold and silver indicates a burgeoning bull market for precious metals, driven by a convergence of macroeconomic factors. As investors increasingly seek safe haven assets amidst global economic uncertainties, the physical demand for these metals has surged, overpowering the influence of paper markets. This surge is underscored by growing concerns among central banks about their diminishing control over monetary policies in the face of rising metal prices. The alignment of these macroeconomic elements, increased investor interest, economic instability, and central bank anxieties suggests a sustained upward trajectory in the prices of gold and silver, positioning them as critical assets in the current financial climate. This scenario offers a compelling opportunity for investors to capitalize on the dynamics of a robust bull market in precious metals. Now we'll show you excerpts of the latest interview. Smash the subscribe button if you're a stacker.
Good luck. Good luck with that thought process. The reason I say that is, just look around you. There's a vast reset from west to east happening. And once that happens, you're either in silver and gold or you're out. And you won't have the ability to get in. So if you think these prices are high, wait 3 months, 6 months, a year. If were China to revalue their gold, and the way to describe that, not revalue gold, but devalue their currency, that's going to price the metal. So if you're trying to time this, good luck with it. I think that's a foolish move. Yeah, the center of the financial world for years and years has been New York and been London. And you've got the COMEX in New York, you've got the LME in London, and those paper contracts are what, for years and years, have priced the metal. Fast forward to where we are now, and what you've got is a premium of $2 to $3 in silver and $30 to $50 or more in gold, Shanghai over the Western prices. So what's happening is you're getting buying in the West, demanding delivery, and then that metal gets shipped to China, and it's an automatic. You're locking in a profit as soon as you buy the metal. You buy the metal, you sell the metal at the same time, then you deliver it, and you book the profit. So metal is being bled from west to east. And if you're a student of history at all, power flows with money, and money is gold. The answer is you're not going to sell gold or silver until there's a currency that you can trust, until there's a place for you to put your money. But we're nowhere near that. We're nowhere near a peak, so to speak. The peak pricing in gold and silver will be, if you want to call it, the bottom pricing on fiat. And fiat ultimately can go to zero. So the inverse of zero is infinity. So I guess my answer is, I would answer the question with the same question: where would you put the money? And if there's no place to put the money, then why would you get out of gold or silver, which cannot bankrupt? It can't be devalued. So you sit with the metal until you find a current years. Silver is way undervalued to gold. And I urge people to overweight in silver. And at a later date, as the ratio comes down, here we are at 80. If the ratio came down to 40, that would mean silver doubled the performance of gold. And if you swapped silver for gold at a 40 ratio, you'd end up with twice as many gold ounces than if you just bought them outright today. So you'd be buying gold with you'd be buying less expensive gold with more expensive silver.
Do you agree with Bill Holter? Will silver price hit $50 in 2024? Post in the comment section if you're selling in this breakout raising margin or if you're holding till 50s and above. Thanks for watching till the end. And now check this video right here because it's a perfect fit for you. I see you on the other side.